Nice hair, nice hair. Guys. I just got out of the shower, bro. Give me a break. Give me a break. I'm giving some people time to tune in. We are live. Thought you got a haircut? Nah, it's wet. It's wet. This is a public stream? Yes, sir. It is a public stream. We got some interesting price action to talk about. Got some nice price action to talk about. So hope everyone is doing good. Congratulations with a new all-time high on Bitcoin. And oh, okay. I had a little error there. Okay. Hope everyone is doing good. Congratulations with a new all-time high on Bitcoin. We're going to be making our plans going forward and just talk price action in general. I'm not gonna lie, I'm gonna be needing my blue light glasses for this shit. Cause it's too late. It is too late for my eyes and these white charts. Guys, you gotta have white charts. If you have black charts, you ain't gonna make it. You rather want to be rocking proper blue light glasses while looking at white charts in the evening than go with the dark side. You do not want black charts. If you want to become unprofitable, if you want to become unlucky, you go to the dark side. If you want to have good looking, high probability TCT accumulation models with those beautiful return to zones, quality breaker structures, and just a very easy return to zone, then boom. You got to have the white charts, okay? It's a must. It's a must. Just for a quick audio check, type 1 in the chat if you can hear me properly, and type 2 in the chat if you can hear me extra good. You hear that, Kimchi? White charts only. Bitcoin Kimchi is the only exception. Okay, Bitcoin Kimchi is the only exception. 2. I love to see it. I love to see it, guys. I hope all of you guys are doing good. I genuinely hope everyone is doing good. Summer is right around the corner, so got some nice times ahead. Time to cook. It is absolutely time to cook. Okay. Gave some people time to tune in. I think you can see it on my profile as well. What is next? Yeah, you can. Let me just quote this. We are live. Boom. Okay. Double. So, right? So let's talk about Bitcoin here first, because obviously Bitcoin is in price discovery, and we got some interesting price action to talk about. Lots of people getting excited, all the bulls stepping out of their cage again, screaming and laughing on X, not realizing that their altcoin portfolio is still down 70% back from January's prices. But basically nothing has changed, right? Basically nothing has changed since the beginning of March. So in the beginning of March, and actually, yes, it goes that far back. In the beginning of March, we pre-planned a reaccumulation that sent price back down or sent price back up into a new all-time high to create a high time frame range, where the purpose of the move up from an expectational standpoint is going to be distributive, right? Where we got that move up right there as our second tap and price went lower. Now, the bull case scenario here, or not even bull case scenario, but what was more bullish for the price action on Bitcoin was the fact that you were not able to break any market structure from the bottom to top back to bearish. So price was making higher lows and higher highs right here. And right here, we had that obvious sell side liquidity that we were targeting during those back-to-back-to-back live streams, if you remember that from the beginning of June. And we SFP'd that market structure low, right? We SFP'd that market structure low, failing to break that back to bearish while creating lots of buy-side liquidity above. Now, we then got a bullish breaker structure right there, back to bullish. But instead of putting in a rotation back up, you went lower again, creating equal highs above you right there, okay? Creating equal highs above you right there. And a bullish breaker structure is always an amazing starting point to create a proper range, because if you get a bullish breaker structure, lots of retail traders can identify some normal structure shifts. So when they see that bullish breaker structure right there, people love to enter on bullish breaks, put their stop loss below that low right there, not realizing that that is going to be the starting point of your range. And therefore, that second tap already grabs the liquidity from the people that longed the initial breaker structure. And then they get stopped out on a move like that before getting the actual second tap to then have a potential TCT accumulation model. So we had an SFP of that low. We had the bullish breaker structure. We created these equal highs here. These equal highs have always been acting as a draw of liquidity. And then price reversed back up after mitigating high time frame key demand that we have had on the chart ever since leaving it behind in the beginning of May. But instead of creating, like, I would say, a proper high probability accumulation, you kind of had you had some sort of an accumulation, but it was more a 2-tab model than an actual 3-tab model, because you kind of had like your lower time frame third tap there. But the displacement was extremely little. Okay, time displacement between tab 2 and 3 was extremely little. You had that proper return to zone. And we created that 1-hour demand, which would have been best case scenario if price was able to come back for this demand POY right there and create some sort of like a proper third tap that we can trade into high time frame swing longs right there, targeting those equal highs. Now, right here, we had a local topping structure prior to taking that main high. But for everybody inside of the Discord community, I was talking about the fact that if you want to put in a macro high, you are going to be taking out those liquidity curves. We literally said that the moment we came down there in the end of June. It's like, if you want a macro top, you're not going to be leaving behind that much buy side liquidity. And also right here on that retracement back down, the only thing that just happened here was built more liquidity above these points. Now, that doesn't mean that you need to immediately go up and grab those points. It just means that if price goes down and you get some sort of a long confirmation, all those highs up there are simply acting as a draw of liquidity and can be looked at from more like a magnet perspective of a POY where price would like to go. Now, I was pre-planning inside of the community a potential long from here. I had a short idea and a long idea. And this was just locally speaking, just recapping the price action real quick for all the people watching the stream now as well, right? Where I kind of had like multiple scenarios mapped out, because basically following your higher time frame structure pool of the most recent range rotation, you were making higher lows and higher highs, and price on the lower time frame broke back to bearish right there. So what I was kind of looking at is like, okay, my best case scenario was for price to go up there, have some sort of distributed behavior, go down, take that low right here, and create some sort of an accumulation model. This was one of my ideas, where price comes down, takes that low, creates some sort of a 1-tap, a 2-tap, and then you get some sort of an accumulation model in here. that you can then take towards that buy side liquidity, because it's such an obvious draw of where price would like to go from a liquidity standpoint, because these markets move from liquidity to liquidity POI, and there's just so much buy side liquidity above that would be amazing. Now, if you do not create an accumulation model in here, then there was some low time frame demand right there. Okay, there was some low time frame demand right there. However, if you were to come down towards this demand POI, bouncing from a level like this is going to be a temporary bounce, because you're simply building more liquidity below these main lows right here. These lows will simply be aligning. And then therefore, if you go lower than this low, I was expecting price to go and take out all that sell side, get a temporary bounce there before sweeping that sell side liquidity. And then from there, we can look for some swing longs that can take price back up towards that buy side liquidity. The other scenario was to go higher, right? The other scenario was to go higher and create either some sort of a redistribution model in here, right? Create some sort of a redistribution model in there with a potential 1 tap and a 2 tap, which did get that second tap high right there, but never confirmed a third tap on the lower time frames as well, or watch for these highs to get taken. And if we're going to get an aggressive sell-off after taking those highs, you can kind of look at this range from a potential distribution standpoint. And if you simply close higher, showcasing that the whales are not interested and market makers are not interested in using that liquidity as a sell-off, but rather as a continuation, which can get confirmed by closing above on the high time frame, above your extreme liquidity point and not wicking it, then we can expect these all-time highs to get taken. And then today, it was very simple, right? Today was extremely, extremely simple, where it was like you were in an extremely bullish environment because you created good-looking structure demand below while having your market structure below right there and having equal highs above right there, because this just front ran the all-time high on the inverse perpetual chart, which in my opinion is the best chart to use for trading Bitcoin. And then during New York here, I was looking for a potential accumulation scalp. We had a beautiful range formation right there. And this is simply acting as a draw of liquidity right here. Okay, so it's basically inevitable that price is taking those highs, because you have equal highs with an all-time high. That's always going to get taken out. And today you had a 1 tap, you had a 2 tap. It was basically an environment where you were ranging for that entire day, because you kind of had your Asia session and your London session both here. Asia is showcased in purple. London is showcased in blue. And you were basically curling down right here. Okay, beautiful curvature of liquidity. Having your Asia highs intact, having your London highs intact. So expecting some manipulation on New York OPA. We got that beautiful sell to buy. Was looking for some sort of an accumulation model in here, but you kind of had like local demand mitigations and already went higher. Not really anything that I'm interested in trading per se. And now we are in price discovery. So that was basically Bitcoin, right? It was more so that we were expecting for this high time frame buy side liquidity to get taken, because that's basically going to be inevitable, because there are going to be two scenarios, right? A macro distribution or a continuation. If you want to have a macro distribution, you're going to take that buy side liquidity, because they will use that to fill shorts. If you're going to have a continuation, you're going to take that buy side liquidity because they use it to push price higher. So in every scenario, you were going to take that buy side liquidity, and we got it. The only thing that's unfortunate, right, is that we did not get a proper high probability long confirmation here on Bitcoin, but we just front ran that accumulation, right? We were looking at this range and we just front ran that range low right there, allowing for accumulation model developments, which is a bit unfortunate, but nothing that you can particularly do about it, right? You either have it or you don't. Spot positions have been getting filled, and those are currently increasing. Would have loved, and I'm still looking to fill more longs from a leverage standpoint, which we're going to dive into in a second. But price is currently expanding up right here. And this idea remains the same, right? It's literally just like everything in between the range high and your deviation limit can be manipulation if you go up aggressively towards your deviation limit, then and you close above it, then that would be considered a breakout. But this is where most people go wrong, right? You have like 9 deviations on both ends before getting a breakout, and on each deviation people scream for a breakout, but they can simply wait for the breakout to confirm it. It's really that simple. But this is kind of what I'm having here, and this is what I have been having on the chart for all this time. Basically, anything in here can be looked at from a manipulation standpoint. If we close above the DL2, that changes, right? And obviously, if you go up aggressively towards that DL2, then this doesn't look good at all, right? If you apply some rationality towards your distribution models, it is already lesser probability that you did not get any proper moves down after putting in the second tap that broke back inside of the range. It's already more bullish than bearish that you did not break any structure back to bearish, but you just SFP'd, accumulated, and shot back up. So getting an aggressive move towards that DL limit is already showcasing the lower probability of this high time frame model, right? Now, if we go up super slow in a rangy fashion, that's when we could be looking at something like this. But it's really that easy, right? From an expectational standpoint, from a high time frame expectational standpoint, it's like we failed to grab high time frame demand, obvious buy side liquidity, timing perspective, all that stuff. It makes sense to me for something like this to develop. Hey, if we close above it, then that changes things. But until then, the original idea still remains the same. Really, it's really that simple. Now, from a resistance standpoint, first, I want to make it very clear that you do not want to get squeezed in a short squeeze, okay? When price is expanding like this, the last thing that you want to do is go on a lower time frame and try and trade every single low time frame deviation or temporary SFP for a potential distribution model and just get wrecked on the way up. That's the last thing that you want to do, okay? The last thing. So let price expand, let price get some low time frame break of structures, create mid time frame ranges, and then from there we are looking to get involved again. But when you're in the middle of that expansion, just be an observer and then wait until the next high probability environments come to you. Now, from an overall high time frame resistance standpoint, it is important to understand that demand and supply levels, so right here you can see different demand levels. Demand and supply levels always have priority over any negative FIBs, okay? It's very important to understand that demand and supply levels are more important than FIB levels. FIB levels are used as a +1 confluence towards your supply and demand levels. Now, obviously, because we are in price discovery, we cannot really look at anything from a supply perspective because there's nothing on the left because you are in price discovery. Now, following high time frame structure, I'm going to skip over these. Let me just map it all out right here. Higher lows and higher highs, SFP on both sides, higher low and higher high, higher low and higher high right there. I think you guys are all familiar with my so beautiful negative FIB, where Bitcoin really likes to respect the -618 and -1. And you can technically draw that like this, and that would give you higher prices. Oh my God, Lars, 140K. I'm just mapping out the negative FIBs, okay? But a negative FIB like this is less important than a demand level on the USDT dominance chart, okay? Because the USDT dominance chart actually has demand levels below, and the charts work anti-correlated. So if Bitcoin goes up, USDT dominance goes down. If USDT dominance goes up, Bitcoin goes down. Okay? And on the USDT dominance, we do actually have demand levels below. So these different demand levels below on USDT dominance are more important than FIB levels on Bitcoin above. Do they align, right? Is Bitcoin coming into a FIB level while USDT dominance is coming into a demand level? That's obviously double good. Now, that's why I want to showcase here these USDT dominance different key demand levels that you want to have on your chart with alerts placed at them. Because on a higher time frame here, we simply have USDT dominance being in a high time frame range. Basically, since March 2024, we have just been ranging in this environment where price has gone up, distribution, come down, go up, distribution, come down. It's really clean price behavior. And we are coming down towards extreme demand levels. Now, this could be some sort of a higher time frame accumulation, where this is a 1, that is a 2. This was your lower time frame third tap that created that higher time frame third tap POY, and this could be that higher time frame third tap right there. From a model 2 accumulation perspective, definitely an opportunity where you have a 3-day demand zone in confluence with a 4-hour OBIF, so order block with the inefficiency right there, that you definitely want to have on your chart, which is your extreme demand within the range. So if you want to respect that model, then that 4-hour order block with inefficiency is going to be your extreme demand, where if price comes towards that level, let's say we go down, do something like this. If price comes towards that level and you get that bullish breaker structure like this, that is definitely high time frame topping structure formations and bear market, I would say bull market tops for Bitcoin if you get something like this. Okay. Now, besides that, you can obviously also go lower and get a potential move like this. Just as an example given, go down right here for potential model 1. And then you could be tapping into this high time frame demand, where this demand is simply nothing other than structure demand. Okay, so right here, you can see I'm on the 3-day now, but on the daily time frame, if you go to the left, just a quick elaboration on the POIs. If you go to the left here, you can see you have daily structure demand. It's not actually daily structure, but you cannot go on a lower time frame here on the daily time frame or on the USDT dominance chart and still see that data from back in the day. So I'm using the daily as the minimum, but you can see the structure, the inefficiency creation, absolutely valid. And you can also see it here in that lower section. Also that pullback right there, expansion, creating that inefficiency, having all this liquidity below as well, that local liquidity right there. Very nice POY as your demand levels. So the different demand POYs are at 4.02, 3.67, and 3.35, where 3.35 also has a negative fib from this swing high to that swing low in that area as well. So these are definitely great levels to have on your chart, that in case Bitcoin creates some sort of a low to mid time frame distribution, then it's acting as a +1 confluence for that potential short play if it does come. Okay, so have these levels on your chart. And then for the Bitcoin chart itself, this is definitely like, if you manage to get there, you would definitely want to be taking profit, because those are going to be your negative fibs that have always been respected. It's just not a guarantee that we go up there, but if we do, then that negative 618 is definitely a POY to be watched. But we're going to see here. We're going to trade level to level, let the market create high probability ranging environments again, and then simply compound those gains from the individual high probability models like we always do every single week and every single month. Well, in this case, also having some higher time frame positions backing us up, which is nice. Okay. But I want you guys to understand, before we're going to dive into some altcoins and ETH and the whole total scenarios, that it's going to be extremely tempting again for you to get lured back into your overall bad habits of it's up only season, and you're just going to throw money around without having a plan, without having invalidations, without having proper targets, and you're going to be making the exact same mistakes as you did back in December and Jan. Okay, so as tempting as it may look, on every purchase that you make, you want it to be pre-planned with clear invalidations and clear take profit targets. If you don't and do not have that, then you are going to get wrecked again, okay? Because we have 1,200 people listening to me right now. I guarantee you, lots of people are still down on their altcoin portfolio due to the crash in January, and they did not sell a single penny. Okay, so I'm telling you right now, if you do not have a clear plan on each and every individual purchase and investment, then you are going to get wrecked. Now, Bitcoin is currently expanding up here, nothing to particularly be seen. And the total charts are going to be extremely interesting. So we were bullish on the total charts, right? We were bullish on the total charts. They were pretty clean looking charts, especially total. I would say total itself was the best looking chart. A very obvious key demand. These were all shared on my X before the moment we hit those key levels. Expecting a rotation back up to the all-time high. That's what we're currently seeing. Total 2 also pretty clean right here. Definitely some more room to run compared to total itself. It only got some supply in between going towards that high, but I would be expecting an overall rotation back up. And only total 3 was a bit sketchier, where total 3 still had a key demand level below, but you also already had some demand in here. And it was just a question of if price wanted to come down to this once more before going higher, or if we were going to bounce from this region. Now, I don't like the price behavior that it did from the move up here. Very slow and sloppy move, leaving a lot of sell side liquidity below. Now, you never confirmed any distribution. It's just that ugly price action, that slow grind up price action before expanding. And I also always tell the people where it's like only. I also always tell the people immediately where the only way that you will leave liquidity like this behind in a ranging environment is if you are ready to expand. In a normal ranging environment, you will always take that liquidity. Only if you are ready to expand will you actually go up higher and leave that liquidity below, because the market makers are happy with their positions. Look at those spikes. So yeah, total 3 is going back up there. If we get a high time frame close above this all-time high, then that is going to be my max target right there, which is going to be exit altcoins. So if we see aggressive moves and high time frame closes above the all-time high, then 1.59 trillion is going to be my exit target on altcoins. So I'm telling you that right now. If you want to have a plan and you don't have one yet, then a high time frame close above an all-time high will be this as a max situation. And I will be using the total 3 chart in combination with Bitcoin dominance, okay? Where the Bitcoin dominance is some sort of topping out here, but I'm still a bit like I like the chart, but I don't like the chart. Okay, that's really my environment right here. I like the chart, but I don't like the chart because we do have a breaker structure confirming the high time frame model 1, and this could be that lower high for the lower low. But at the same time that you're breaking structure, you're building buy side liquidity above you right there. You know, so at the same time that you're breaking structure, this lower high generates more buy side liquidity. So it either needs to reject right here and just start to sell off, and then it would look good. If it just keeps on flirting around in this region, building more and more buy side liquidity above, who knows? Bitcoin might get some spikes on a spike on Bitcoin dominance as well. Just take those out before going lower again. But overall, it has been an extremely clean chart. Had some distributions here that failed to have any follow through, but so far we do have a confirmed distribution. I'm just being a bit more skeptical due to that buy side liquidity there. But we did have that break of structure, already called it up on that level 2 break of structure right there around 65.5%. And if we are going to get a retracement towards the downside, my max target for Bitcoin dominance is going to be that max sell side liquidity right here. Okay. This will be my max target on Bitcoin dominance. So combine that with your total 3. If altcoins start to go up aggressively and total 3 is closing high time frame candles above that all-time high, then 1.59 trillion will be my personal max target. Again, that's a max target. These are max targets, not guaranteed targets. My max target will be 1.59 trillion in confluence with 46.8-ish%. So coming close to these levels while seeing distribution models, that will personally be, for me, the exit triggers on alts. And that's, in my opinion, also the only thing you need, right? Combination with the Bitcoin and ETH price behavior, and then these targets on altcoins, you can have very nice RR entry opportunities. Very nice RR entry opportunities. These are just buy orders coming in. Look at that. Boom, boom, boom. What's ETH doing here? ETH completed that market maker continuation model. I still hate the fact they did not give me an entry down there. That's very unfortunate. Spot has been perfectly fine, right? But the way that we came up right there is like the opposite of what I like, okay? Like right here, this would have been the perfect opportunity. Right here, the people in the VIP know. The people in the VIP know. We were looking at that distribution into accumulation model right there, bro. We were looking at that distribution into an accumulation model right in this environment. And you got that beautiful exhaustion coming into the low. 1, 2, 3, 4. This happened during Asia, though. This happened during Asia, but that beautiful exhaustion coming into that low, like look at that candle right there. Beautiful bullish closing candle. And we were just looking at something like this right there to get involved. Just following our TCT confirmations, but we just did not get that pullback. Did not get the pullback right there. The moment we broke structure higher there, expectational order flow was a higher low for a higher high, continuing with the market maker continuation model. The only extra scenario was because we came up leaving so much sell side liquidity below, that I was like, hey, maybe price is so sweet to give us a sell off into demand before continuing higher, right? Getting a distribution there, selling off into demand, and then going higher. But we never got a confirmed distribution model right there, never got a confirmation, and price simply went up, continuing with the expansion phase, completing right now the market maker continuation model. So absolutely beautiful price behavior on ETH there, just more unfortunate from an entry perspective, right? More unfortunate from an entry perspective. And that was also the same on most pairs here from more a leverage standpoint. You have XRP with an absolutely beautiful Model 2 accumulation schematic, right? That confirmed super, super nice. Sui also currently expanding, still in that trade from April. But Pepe, in my opinion, Pepe is the best example here. Pepe is by far the best example where you did tap into your extreme demand, right? You tapped into your extreme demand right there. But the price action after tapping into that extreme demand was more focused from an overall distributive behavior where you were taking the highs while leaving the lows intact, right? You were taking buy side liquidity while leaving the lows intact, creating sell side liquidity, also getting that kind of like local environment in here as well, right there. You know, getting that local distributive environment in here, just building a lot of sell side liquidity below. So I do always clarify that you need to be cautious if price comes into extreme demand levels, that you sometimes get that sloppy price action before expanding higher, because that's the extreme of the extreme. But from a more entry focused perspective, it's very hard for me to get a long in between here. I'll just have to be long from lower in here, but I'm not really actively looking to, catch a long if we're just taking buy side while leaving sell side liquidity below. I'll then diverse my focus into other pairs that do have better price behavior. But Pepe here, lots of buy side liquidity grabs, lots of sell side getting generated below, but price is ready to expand, and we're just simply seeing that expansion higher. It's really that's just the only reason, because we came in towards this 3-day order block right there. Beautiful 3-day order block, and we're seeing the expansion from it. I have a supply POI right there, and besides that, not a whole lot, right? But that's definitely a good looking supply POI, and all these pairs are expanding. All these pairs are expanding. Currently, my two active longs are on MNT right here. So my active longs right here are on MNT based on this accumulation model, because this definitely had a good looking accumulation model. It kind of was the hedge last minute that turned into a runner, and on SUI. Okay. And on SUI. Now, guys, you will be prepared. Okay. You will, not prepared. You will be surprised. Okay. You will be surprised about the fees of this setup. I actually made a pretty good amount of money on the fees on this setup in this entire environment back down, because I think people were just more focused on shorting than longing at the lows. But you'll be surprised that people ask me, Lars, didn't the fees eat you alive? I think I'm either break even or made a tiny bit. Yeah, I'm either break even or made a tiny bit of money on those fees. And I'm also in XMR. But that trade, I'm not even counting that trade, to be honest. That position is like, I think I'm risking like $200 in this trade left. Like this position is like nothing. It was really sloppy price action there. So I'm not counting that as my active position. I just have that open with the final target there. I make like $1,000, but so I'm not counting that. It's mainly MNT and SUI right here from an actual leverage entry standpoint, where I'm still looking at some other plays, right, to develop potentially, but we're currently just expanding. But on MNT here, you had a beautiful accumulation model, and it was really the fact that it was like a good looking high probability accumulation, but it was the hedge that turned into the main position. Literally, it was a hedge that turned into the main position, because looking at MNT here, and guys, I have no idea what MNT does. Okay, don't ask me anything about MNT itself from more fundamental perspective, but we literally had an aggressive move up, a move down, an aggressive move up, and this right here was the extreme demand of that entire swing move up from low to high. Literally from low to high, that was from low to high, that was your extreme demand, and price came into that extreme demand, creating, I think, around a 25-day accumulation model right here. Not even 20-day, created around a 20-day accumulation model, where you have the initial range low, you have the initial range high, price comes down, sweeps that low, comes back inside, and then gets pushed down aggressively towards that third tap. Now, that third tap got put in a ranging environment right here, where I was looking for TCT and TCT. Did not personally get the TCT and TCT because it was more a 2-tap model right there. And we got the expansion, but we had this room of error. Okay, we had the room of error right there upon that supply mitigation. So I wasn't really confident. This wasn't really a break of structure, because it was more a range deviation. We had that supply above, so I simply needed to see more. And right here, price got sent back down. Right, price got sent back down, mitigated the extreme demand for potential extended accumulation. But also here, You had a bullish breaker structure, but the bullish breaker structure is only one candle. And now I want you guys to understand, okay? Now I want you guys to understand that a 1 day breaker structure, or not a 1 day, a one candle breaker structure that is super aggressive like this, you always got to be a bit more skeptical, okay? You always got to be a bit more skeptical because it's way easier to manipulate one candle than to manipulate an entire structured move up. So when you have these one candles that aggressively close higher, you always got to be a bit cautious, okay? You always got to be a bit cautious. So wasn't really that convincing right there. Also not really a return to zone on the pullback. Got a super fast move down here, creating a bad breaker structure because the second candle immediately closed below. There wasn't really anything to be seen here until price started pulling back slow and steady in this environment right there. And then got that bullish breaker structure and the close of the Asia. You can see the difference between that pullback and this pullback right here. You got an aggressive buy to sell versus a slow and consistent move down, leaving highs intact. You broke that structure back to bullish. You respected the demand chain. And from there, you could have longed on that break, put the stop loss below the low, and then target higher. Okay. So I'm simply myself. I'm just targeting that range high. I may leave like 25% run just in case, but I saw this set up a tiny bit later, so I couldn't get properly filled because my limit order literally floored price right here, which isn't that surprising because it was a lower. It's definitely a lower liquidity pair, but that limit order literally floored price. Like I had my limit at 562 right there, which ended up being the bottom, and then price is expanding up there. So looking to take profit on it at the high, and then Sui, I'm just waiting for a new all-time high, to be honest. Okay. So those are my current long positions. And then I do still have my eyes on different pairs, like, for example, a Falcoin. And this is what I've been focusing on from more a high time frame leverage perspective, where you have a high time frame range creation right here with your initial range low and your initial range high, and then you got that deviation. And this is your second tab model. After putting in that second tab, you created a high probability third tab POI, which is this 1 hour demand chain. And right here, you're building all these lows above that as your extreme liquidity. Okay. It's very simple. Price not taking this liquidity so far is just indicating that the move up is going to be less sustainable. You can get a rotation back up to here, but really from a follow-through perspective, the chances are less likely because you never had that proper accumulation model with a proper third tab POI, okay? And a third tab mitigation for a long. This will be a high probability long that you can take for massive reversals. Now, price might go up to here, might take that buy side liquidity there, but high chance that from there, you will get rejected back down again. So we have lots of room for displacement. So we're going to see if we ever get it. It's simply just a scenario of like, if we get it, it's going to be nice. If we don't, then we don't. But this is the main situation that is taking place right now on most high time frame altcoin pairs, where you do have your second tab creation, you got that extreme liquidity, and then you don't have a proper third tap yet. Now from spot, that doesn't matter, right? Spot is already actively getting scaled in on second taps, high time frame demand mitigations with invalidations below key levels. From a leverage entry standpoint, I'm trading third taps, not second taps. On MNT, you got it. On Sui, you got it. But on the Filecoin that I was watching here, for example, you don't. So it's really that simple. Not getting third tab confirmations can still allow price to go up. You can still get it, by the way. But if you don't get it, you can still get a move up. But the move up is going to be less sustainable than if you were to get that third tab. Let me check the chat real quick. Yo, talk about Bitcoin. No one cares about this current discussion. Well, if you simply go and double click on your screen to the beginning of the stream, you will actually realize I talked about Bitcoin, and we have 1,800 people listening to me right now that are literally listening to what I'm saying. So just go back to the beginning of the stream. And if you actually pay attention to what I'm saying, which is pretty valuable information as to how you could have traded this, you can make more money on a setup like this than your entire spot position in general, because it's all about risk to reward. You might hold a coin thinking that your 10x is going to deliver something, but a trade like this can be taken with a 2% risk, allowing from a 1 to 8, and therefore 16 RR entry opportunities, which is a 16x on your risk. So if you actually understand where you need to enter in accumulation models, allowing you to have very tight invalidations, you can be in a risk-free position that can net you 16x the risk that you put on the trade, instead of jumping in, looking at Bitcoin, saying, let's talk about Bitcoin when the thing is currently expanding and there's nothing to talk about, and you're still down 70% from your original spot position that you bought back in January, and then focus on here and learn how to be in a risk-free position that can net you 16x the risk that you put on, instead of hoping for a 10x on your spot position that's currently down 70%. But I just talked about Bitcoin in the beginning of the stream. Guys, let's talk about Bitcoin. We have a 1 minute candle going up. But I did talk about Bitcoin already. So if you go back to the beginning of the stream, you can see me talk about Bitcoin. Still any spot opportunities? The thing is, Mr. Diaz, I think you are inside the server. Like, I have actively been saying that this is all, those third taps is all from a leverage entry standpoint. Spot has already been long bought. Literally, spot has already been long bought. You don't need exact entries on spot. You buy at discounts and you sell at premium. That's what you do on spot. People forget the selling part because they think every time it pumps, you're going to get a move to an all-time high. But literally, let's take Sui as an example. Let's take Sui as an example. You come into extreme demand and you buy at extreme demand. Maybe you wait for a breaker structure, who knows? But you buy at high time frame key demand levels, and you get your refined entry if there is a leverage entry opportunity, which in this case happened. You get to move up, price comes down. This is your high time frame market maker demand. This breaker structure confirms the rotation back up to this high, following high time frame market structure rules. It's really that simple. On the high time frame, your swing structure on the 2 week is simply a high or a low, a high, and a higher low for a potential higher high. How do you confirm that higher high? By measuring the market structure from top to bottom, making lower highs and lower lows. You break that back to bullish right there, and that confirms the rotation back up to that level 1 market structure high, especially if there's no resistance in between those points. So if price then pulls back towards your extreme demand, and this right here is your extreme demand, which is not only extreme demand, it's your extreme market maker demand, then this is going to be your spot buy right here. It can really be that simple. This can be your spot buy. You buy at demand and your invalidation is 15% below the level. So just calculate what you are willing to lose if price goes against you 15%, and that's going to be your buy order. And then you target your new high because that's the order flow objective based on market structure. But you just need to be aware of it when you're in the moment. And people only people don't like buying in red. It's really that simple. People don't like to buy in red because at that point it doesn't look good yet, right? It doesn't look good yet. But you buy at high time frame key demand levels in discount and you sell at a premium. Now, what is going to be your RR? Initially speaking, you're risking 15% to be making 120%, which is a 1 to 8. If you're buying right now, your invalidation stays the same and the target stays the same. It's a 1.6. You know, so that RR, it depends on the pair, obviously. Like Sui is expanding pretty aggressively, but that RR is on Sui at least not there anymore. But you buy at high time frame key demand levels in discount and you sell at a premium. Is your market maker manipulation playbook for Bitcoin still in play? Okay. I want you to ask yourself, Mr. Gustav, and this is a genuine question, okay? Because you said market maker manipulation playbook, so that means that you read the post and you understand it, or let's say you read the post and you memorized it and you kept it in the back of your mind, otherwise you wouldn't remember the name. So then my question to you is, what is the purpose of the market maker manipulation playbook? What am I saying what the purpose of the move up could be? And this is a genuine one-on-one question right now. So let me know in the chat because I want you to understand it. I don't want you to rely, okay? I don't want you to rely on me. I want you to understand it yourself. What is the purpose of the move up in my market maker manipulation playbook? I'm waiting for Gustav to answer me. What is the purpose of the move up explained in the market maker manipulation playbook? To create a macro distribution to bring price back down. Exactly. So, if you look at this chart, is a distribution invalidated or not? Now, there is a difference between it looking good and getting invalidated. But is it invalidated or not? And if so, how do you invalidate a distribution? It's very simple. It's the range. How do you invalidate the range? Exactly. It's not invalidated because it's still inside of the deviation limit. Exactly. Now, obviously, if you get a confirmed distribution, your invalidation is going to be, let's say you do something like this, your invalidation is going to be that third tap high. But you don't have a confirmation yet. We're still in the overall idea of it. So then you look at it from a ranging perspective, right? And the DL limit is all the way up here. So right now, an invalidation from that idea is going to be closures above that DL limit. If we start to randomly just drop down and break structure back to bearish, well, then that is going to be your invalidation, just as any normal model. Now, I'm not saying that it looks extremely good at the moment because you barely were able to break structure back to bearish and the expansion up is fairly aggressive. But at the same time, from a high time frame perspective, you always need to be a bit more flexible. But it's important that you guys understand, okay? I don't want you guys to be dependent on me. If you understand it yourself, then you can just, always be ready. But great work. I sold some big spot backs to get into the long setups that never came. Well, that have not come yet. There's still an opportunity. But that is completely your fault. with all due respect, buy in on spot at the lows, backing you up, and then have cash on the side for just your normal leverage plays. Don't sell one. If you sell one, if you guys truly pay attention to my behavior as a trader in the market, I'm always either I'm in a long position and I'm keeping 25% open to hedge it into another high probability short that I can take into a short and a long that are both risk-free, while having a spot position at the same time as I'm trying to look for longs to already back me up for higher prices. I'm always benefiting. At least I'm always trying to benefit. You never want to corner yourself in one point in the chart. You can be way heavier into the long side or way heavier into the short side, but I'm always somewhat hedged. So I'm looking for longs in this case, but I already have spot backing me up for higher prices while having some long position to actually open. While also being in shorts to take into those longs where all those shorts are risk-free. So you have risk-free shorts actually Pengu a guaranteed winning short with spot backs backing you up for higher that you can take into a potential high time frame leverage long. You're winning in every environment. If you're going to sell your spot, that means you're like, okay, I'm only going to be making money if we get exactly this. And then you're putting yourself in that environment where like, okay, what if we do not get it? Then you're completely sidelined. I know, bro. I know, but you still did it, right? And I'm not bashing you here. It's just a moment of awareness. But you're only going to learn if you actually like let it resonate with you. Fortunately, I have spot Adam. Yeah, but the problem Shh. The problem is, okay, you're not going to get what you want if you don't get what you need. Okay? I'm going to leave it there. You're not going to get what you want if you don't get what you need. I'm gonna leave it there. If you know, you know, and if you don't, you don't. Okay? But you're not going to get what you want if you don't get what you need. So we're gonna see. We are gonna see. Let me check these pairs. I'm also really liking APT right here. I'm really liking APT as well. Boom. Clean prices. Clean prices. That was a Farcoin alert going off. Some sort of an accumulation. Yeah. Arthur finna jinx us all for real, bro. Lars, can you talk about Bitcoin against other fiats? I shared a chart in Discord. I don't know if your Discord is the same username, though. I'll check after the stream. Just invalidation high type and close. Yes, sir. It is beyond me that people do not want to learn. This shit is free. Take notes. Yeah. Join VIP to not be sidelined again. Facts, though. The thing is, guys, the one thing I dislike, okay, is APT good for a long yet, brother? The long was already confirmed on the breakout structure in the end of June. This already confirmed your model 1 right there. This is just extra. If you get something like this, that's extra, but that's not guaranteed. You're already in a confirmed model 1, and price should rotate back up to that high right there. But the thing is, I love higher prices, okay? Because it allows me to do the exact same I always do while having spot positions increasing, which is an extra compounding effect to your overall journey, okay? What I dislike is that it makes people lazy. That's really what I dislike. It makes people lazy, and they're just going to completely ignore what they have been working on and go into the trenches to then lose everything again from a repeat. And it's going to repeat the exact same thing that happened to you in December, Jan is going to repeat itself again, but then just at the end of the year, probably, you know? So I like the people that use this opportunity to have an extra compounding effect from a spot perspective, and then still actively start trading the markets, realizing those consistent gains over time, compounding them, because that is where true financial freedom is created. But now you're going to have all these bulls coming out of their closet again after losing 80% of their portfolio, screaming for fucking 500k Bitcoin, and that they were going to get a super cycle, and now the cycles are changing and we're never going back down again. And then people are just going to FOMO into any low cap that they see, and they might actually make money unrealized, and then they're going to get wrecked again, you know? So I hope that everybody to me listening right now can look at these charts objectively, put emotions to the side, have a plan for each and every individual purpose, because there is opportunity, okay? But you need to learn from the mistakes that you previously made. If you did not profit anything back in December and Jan, then why would you think you're going to take profits correctly now? You know? Because you're simply not going to. So if you at least make a plan for each and every individual purchase, then there is opportunity for you to make money, and good money as well. But you just need to have a plan with an invalidation and a target, and not get sidetracked and lured into this everyone is going to get rich quick narrative. Is bread a good buy? That's up to you, brother. That is up to you. If you get your confirmations and you have your invalidations, like, that's what I'm saying. Is bread a good buy? That's like, what if I'm gonna say yes? That's the exact thing I mean that is lacking in your brain. Is bread a good buy? What if I say yes? Then what the fuck are you gonna do? Buy bread? Where is your invalidation? Where are you gonna take profit? You know what I mean? Like, is bread a good buy? If I say yes, you're gonna buy. If I say no, you're not gonna buy. You know, so you're dependent on me the entire time. I'm not trying to be mean here. I'm just trying to open your mind. I see Crash Boo posting bread. You need to get your ass in the Discord server. Yo, you need to get your ass in the server right now. I'm telling you right now, it's gonna be the best $50 of your life. You're gonna save yourself a lot of money. Okay? You're going to save yourself a lot of money. Yeah. What happened to your hair? I just got out of the shower. I just got out of the shower. But that's the thing, right? It's like it's really always the same. This is how it goes. Okay, this is how it goes. You talk about it's this is exactly how it goes. Let's go to Andy real quick, okay? Because Andy was just the perfect example. Let's go to Andy real quick. You have Andy right here, okay? We called for the distribution model right there. I did not expect such an aggressive move down. Okay. My max target at that time was right here, which was still a 60% correction. Everybody called me crazy. Everybody called me crazy. Lots of hate online. What happened? We dumped fucking 90% instead of 60%. And then after a call like this, now people start listening to you. Now they start listening to you, but it's already too late because they missed the damn most important call. And then literally from the opposite end, it was Sui, right? I was publicly screaming Sui at the April lows, which is the long I'm still in down here, screaming on public live streams that I will push price myself if we get that breaker structure. And then after a great call, now they start listening. But it's always too late for those people. Eventually, they will benefit off of it, but it's always one call too late. You know what I mean? It's always a call too late. A new sticker, yeah, those are definitely some new stickers. Those are definitely some new sticker opportunities. I know we have so much distractions and influencers pumping stuff. Now, guys, I do want to clarify that I have a good relationship with Crash, and he's actually a really good fucking trader and a really good fucking investor, right? Have had calls that is absolutely insane, and I have nothing but respect for. But obviously, he cannot be talking bearish about Brett because he's the most known for Brett. So you gotta be connecting some steps in your own brain regarding that aspect as well. Okay. But now I can look at Brett. I will look at Brett for you just for the sake of looking at it, right? Because ETH is going up, so Brett is most likely also going up. Right? Brett is most likely also going up. Yeah, I would say for me personally, like this chart, it's more a chart that you enter on based off conviction, right? You have demand mitigated. Definitely got a slower move up right there. You're at supply right now, but if you're just looking at normal market structure rules, then that is going to be your bullish breaker structure right here. That's going to be your bullish breaker structure. You mitigate extreme demand right there. If you break structure from the top to bottom back to bullish, just like this, if you break that back to bullish, basically combining your level 1 and your level 2, then you can get that rotation back up to here. And then above that high, you would want to see some follow through. And I don't have that much resistance in this region. In my opinion, you got some supply right there. Okay, so you have some supply in this region. Let me actually find the exact POI. Yeah, so you got some supply in this region right there, which is nothing too significant in my opinion. Just maybe like a temporary stopping point. And then above that is mainly just liquidity to me. So breaking this market structure high back to bullish confirms rotation back up to that high. If you manage to get follow through from there, and you come into this supply, I would expect a higher low for a higher high following something like this. And I don't really have a lot but buy side liquidity above all these highs, which should get squeezed pretty easily if we are managing to close above that supply. So just from looking at, you know, high time frame structure, that's what I would expect. Trade level to level and kind of see from there, you know. But right now, this is a terrible moment to buy. Like right now. Like, I'll rather buy at the exact same price point. Like, you should have been buying at the lows right there, obviously. But I would rather buy at the exact same price point after having seen the breaker structure. So let's say price is located here right now. Okay, we're located right there. I would rather see a break, a pullback, and enter at the exact same price point, but now not from a context of coming into resistance, but actually flipping it. Wait, what is Tom saying? Lars, my CRV position is down 25%. Should I add more margin? Okay, Tom is asking, my CRV position is down 25%. Should I add more margin? Well, the thing is, I can't really give advice on the trade because it's not really a TCT model that I like to enter on. But I would not enter more to lower your average entry. That's usually not the correct way to go. If you know, you know. Hey. If you know, you know. Hey, Tom, I advise you to not average down, but I cannot really give advice because it wasn't a TCT model. Okay. Well, bro, we got 2,400 people listening right now. They're like, what the fuck is that guy talking about? Okay, I closed it. Oh my god. See you on Twitter in 6 months. Hey, see you in Twitter in 6 months after you start your own server. But Tom, you do have 100% win rate. You do have 100% win rate. So you are better than me. Okay. Now, guys, we've been going for an hour. I recap Bitcoin. Don't forget, my expectations, I don't marry expectations. We trade confirmations. It's just an overall expectation. We're making money either way. We're making money either way. If prices go to fucking Valhalla, well, then all my max targets are going to get hit, so I make more money. It's really that simple. We're going to wait for our mid-time frame models, and we're going to trade them accordingly. And it's really that simple. It's really that simple. There's going to be lots of opportunity, and we're going to try to make the most of it. You're going to get all these bulls just coming out of the market, coming up with crazy targets again, and they could be having a great time for the upcoming months, but shit's going to hit the fan eventually. And I want you to understand that you cannot trust someone, and I'm telling you this right now, you cannot trust someone that has never in their fucking timeline history nailed a single sell pivot point. It's really that simple. You cannot trust someone with bullish targets and bullish posts that hasn't nailed a high time frame sell pivot point accurately. So for the people that you start to follow and the people that will become louder and louder, Just check if they ever called accurately a high time frame pivot point towards the downside, and then go from there. I love every single one of you. I hope you don't get dragged away by all these bullish price actions luring you back into the trenches, because you will eventually be back. And then you either are improved from now till then, or you simply shift and lifted focused, or in shifted focus. What do you think of Aave? Aave is extremely good, bro. Aave is extremely fucking strong. Look at that. Oh, man. Bro, I was looking at that sell side liquidity target to potentially buy, but I wasn't really that eager to buy because it wasn't really a part of my portfolio. But I was like, okay, if I want to buy, I want to buy on that sell side liquidity sweep. Oh, wrong too. And we just front ran that. Look at that. But I'm not going to lie. The bottom on Aave looks ass. The bottom looks terrible here, but we are leaving the bottom. And this is extremely strong price behavior. So I think Aave can definitely be a great performer. Can you show us how to draw those fib levels? Yeah, so basically what you do is you just pick, you identify the most recent market structure pool. Okay, it's really that simple. So you identify your market structure. So let's say we have kind of like this. We have a low. I'm going to ignore this point because it was more rangy price action. And then you get a higher low for a higher high. That's kind of your swing structure right here. Okay. Or you use it from the low up. I would say this. Okay. I would say this right here. Low, lower high, lower low, bullish breaker structure. Very bad breaker structure compared to that time it took to break it. But this could be it. What you do to determine where potentially that next pivot point could end, where that next higher high could end and take place, you draw a fib from that most recent low to the high. And then you put on the negative fib targets, and that gives you these targets. Where the negative 618 and the -1 is a very good level. Okay. So you pull it from that most recent swing low to swing high to determine where the next high could be. Which would be around 620. But I don't know if there's a chart with more data here. Oh, there is. Yeah. So you can combine that with some supply here on the left, probably. Oh, yeah, look at that. That's some nice supply that you can look at in combination. But I would say Aave is pretty damn strong right there. So you can see that refined supply there, and that is, I think, aligning with that 618. Yeah, so that's a great area right there for a temporary for an overall rejection. Doesn't have to be the high. It could just deliver, a higher low for a higher high. Because if you do come up there, then you are having a bullish breaker structure. So who knows what you get. But that is probably, there's a high chance you'll get some sort of a rejection from that area for sure. Okay. I appreciate everyone for tuning in. Again, you can find me inside of the TCT Trading community, where we're actively day trading, actively scalping and mid-time frame swing trading these markets, so you can get consistent profits on a weekly and monthly basis that then you can also scale into spot, but you have consistent cash flow outside of hoping for your spot backs to go up. And you could already be in a very comfortable position if you listened. Okay, so I appreciate you all for tuning in. I would love to see you all inside the server. I got to go to bed right now because literally I got a live stream for London Open, which is going to be in 6 hours and 48 minutes. Again, the link is in the description of this video, tcttrading.com. And let's see what the market has to offer us in the coming weeks and months. I appreciate you guys. I'll see you all later.